Hey there traders, it's Jeff from thestockbandit.com. Thanks for joining me for this video. It's time once again to kick off a brand new week of trading, and anytime that takes place, we always want to turn our attention to the indices. How has the market been acting? Where do we currently stand? What are the key levels? Because we know that's going to influence how individual stocks move. So last week we saw the bulls basically kind of taper off their early year enthusiasm that we saw on New Year's Eve, and then to kick off 2013. Now, since then, we've been moving mostly laterally. We've edged a little bit higher. In fact, last week the NASDAQ was able to tack on 24 points, and it's just kind of consolidating here. I think that's a really positive way to digest this big lift that we saw right off of this key support around 29.61, and now we're sitting above this 3100 area. But we've got a couple levels to contend with. First and foremost on the way up is going to be this unfilled gap right here. That goes up to 31.36. That's from October. We also have this first lower high here that was established on a failed bounce after the 52-week high was established. That lower high is at 31.71. And then, of course, right up here we've got 31.96. That's the 52-week high. So all in all, the bulls have done a really good job of not letting this market slip, and basically kind of just churning here for a number of days to absorb this big strong move. But at this point, we need to see some follow through pretty soon, or else maybe the troops start to get a little bit restless. So earnings from the bigger names are going to start rolling in this week, so definitely stay on top of those dates in case you're looking to hold over individual stocks on an overnight basis. But that may also serve as some kind of a market catalyst. For the S&P 500, this index has really done an excellent job, not only of lifting right here off of this key support area. I listed that a number of times right off this 1395-96 area, but we saw a quick boost higher, and then over the past week and a half or so, we've kind of churned and eased our way back up. Now, I noted then after those first couple of days that the bulls, and I even noted this last week, that the bulls really needed to kind of prevent a premature breakout here through this 52-week high. That basically the more time we spend consolidating and kind of churning and coiling beneath it, the better off this index may be in terms of once a breakout does take place. So that's at 1474. Last week we got very, very close. We got less than 2 points from there on Thursday as well as Friday. We finished at 1472. So we're facing a breakout here for the S&P. Virtually any strength here would produce a breakout, and basically a nice little amount of consolidation here over the past week or so has been very helpful. A little more would certainly do some good for this index, but when momentum is present, it's really hard to fight it. So all eyes are going to be on 1474 for the S&P. The Russell has been the strongest index of the bunch. It has been hitting new all-time highs, and last week it gained just a single point. So it has been doing a nice job of just moving laterally here after breaking out through this 868 area that had been in place going back into May of 2011. So as I zoom way out here, you can see that this May high 868 was tested last September. We got right up there. Again, there's the high, 868.5 on September 14th. And now that we've cleared that level, we've done a really good job of holding above it. So this is a flag look. You've got the sharp move up. You've got the lateral consolidation. So basically for the Russell, if this index is able to push north of that 883 that it's been challenging in the last couple of sessions, then certainly it could continue its climb. But if we do happen to see a pullback, I would expect to see this 868 at least initially defended. And then we've got the Dow, which is the senior index. It's only 30 stocks. There's a reason why it's called the Dow 30. This is really the Main Street index, in my opinion. Most average investors, they're not real familiar with S&P 500 levels or the Russell or the NASDAQ, but they do know the Dow. And when they start seeing big moves in the Dow, they start paying closer attention. They start feeling perhaps a little bit left behind if it's moving higher. Now, it's been doing that of late. We've seen some real nice strength at the end of last year and the very 1st of this year. But for the most part, we've just been kind of churning. Last week, this index tacked on 53 points. We've got this support zone down here at 13,300 that I think may play a role here if we do happen to see a pullback. However, we've got a lower high right here at 13,588, and then we've got the 52-week high right up here at 13,661. So a couple of big levels coming into view here for the Dow, but it has put in a little bit of short-term rest here, so that does open the door for a possible push. I would expect to see each of these indices start to move a little bit more in tandem. Keep in mind that the Dow hasn't broken out. The NASDAQ is still pretty far shy of a breakout as well, whereas the S&P is facing a breakout and the Russell is already hitting all-time highs. So it's going to be really interesting to see how the next week unfolds. Again, stay on top of things. Keep these levels on your radar. If you're looking for some additional trade ideas to add to your own, check us out at thestockbandit.com. We'd love to trade with you. Aside from that, thanks for joining me for this video. I will have more for you soon, but until then, trade like a bandit.